Good morning. Already mid-September. Weekly price changes this week. Gains across the board in the grains, 12 cents in corn. November soybeans up 19. December Chicago wheat up 4. Minneapolis up 6. The opposite direction, though, for the livestock, December fat cattle down 5.52. October feeders down $12.10. October crude just a marginal change, up 82 cents. And December gold continues its bull market with new all-time 6,000 year highs, up 33 bucks. Crop progress. Actually, a crop is maintaining its yield potential. Corn conditions 68% good, excellent, down 1% this week versus 64 last year. Our yield model went up 0.3 bushel, almost 192 bushel. It's above trend, and USDA is at 186.7, down 2.1 bushel in yesterday's 11 a.m. report. So we're still a good 4.5 bushel above USDA in yield potential. USDA did choose to drop a couple bushel in this last report. Soybeans 64% good, excellent, down 1%, a little below last year, notably. 52.86 actually up a little bit after a big decline last week, but that's above trend but below USDA, who dropped 0.1 bushels in yesterday's report. Spring wheat just about done with harvest, and that harvest obviously going pretty good. Here's that USDA report in a little more detail. The yields for corn down 2.1 bushels at 186.7, but they raised the harvested acreage number again in this report, 1.3 million acres. So the production ended up higher than August and a good couple hundred million bushels above what the trade expected. They expected a reduction. Soybeans at 53.5, they reduced the yield 0.1 bushel, probably smaller than they should have. That is actually the offset by a 200,000 or 0.2 million acre increase in harvested and planted acreage. So we end up with more production, 9 million bushels, more production when the trade expected, 20, 25 million bushel less. Ending stocks, they increased corn 8 million to ending stocks 88 million above the trade's expectations at 2.11, still a little bit below last month. Soybeans, they increased 7 million bushel from trader expectations, and last month up 10 million. Wheat, though, was bullish on the U.S. ending stocks, 844 ending stocks, down 18 million bushel because of a 25 million bushel increase in exports. World ending stocks, though, more reflected what the trade actually did yesterday in price, corn and soybeans with some pretty decent gains. The world ending stocks were down 1.4 million metric ton in corn and down 1.41 million metric ton in soybeans. Of course, soybeans less than half as much as corn. That was a much bigger impact. Actually, we're getting to a situation where soybeans is probably going to be the most aggressive bull market once we finish harvest. Wheat, though, they increased 3.26. They increased just about every country in the world's production. Ukraine, Russia, European Union, Australia, just about everybody but the United States. The end of September, they'll update our United States production numbers in the September 30th small grains report. But there's the trends. The corn market actually up 10 cents, by the end of the day on Friday. So we actually showed most of those gains for the week were on Friday, but new recent highs in corn coming against this resistance. You have to wonder too, with almost a 17 billion bushel crop, can corn continue this rally? But certainly it is at this point. You have to think there's only two things with that big of a crop that can cause corn to go higher. Number one, we're in an agreement with China, who's going to buy a lot. We're in the process of trying to form an agreement with China that will buy a lot more corn. And the second thing is, if what a lot of people are speculating is that corn yields would drop significantly. If they were going to continue to drop significantly, though, our yield model would have to drop week by week. And so far, that is not happening, even despite the pro-farmer tour. It's almost like this report was a sympathy thing with pro-farmer, but we do hear reports of yields, below expectations. We'll just have to see more of that. I think, what do we got? 4% of the corn harvested, not not enough to really know yet. Soybean chart, a nice spike up here on Friday with the USDA report. Of course, the world numbers of supply and demand friendly for soybeans, but not really in the U.S. In fact, they were bearish if you considered what the traders expected, but soybeans still going up. We would like to see soybeans test this 1070 area. We would make some initial sales in soybeans, and then again at 11, we would probably get more aggressive in sales, of course, with basis so horrible in the United States, especially here in the northern plains states where we export a lot to China. We wouldn't be selling cash. Basis is way too bad. That basis is going to get a lot better, but we're going to have to solve that Ukraine war and write a trade agreement with China, and then that is going to get a whole lot better for these northern producers. But certainly we get to those old highs in soybeans for the year, we're probably going to justify some sales. Actually, in corn, rallying back here, we've gained half of the losses we had from February here, base price of 470 down to 390. We've actually gained 40 cents of that back, half of it back. You need to make sales of corn before harvest or during harvest. This is a good time to do it before everybody jumps on that bandwagon. So the forecast for the next week shows more rain here in the northern plains United States. That might cause a little delay, but really we haven't had rain for 2 or 3 weeks. There is some band here that is going to be wet, and it's going to create some difficulty in harvest. So some areas that have been very wet this summer, they've really appreciated the last few weeks. They need more dry weather, but that rainfall here in the next week forecast is not going to help them. But it is going to be dry in most of the rest of the Corn Belt, which is interesting. The 8 to 14 day going out week 2, still very warm. So those places that did not already have a killing frost are certainly going to make maturity. And there were some more areas that in the Dakotas out here in the western Dakotas that had some freeze damage. Of course, they're not big corn and soybean raisers out here in the southwest, but there was some scattered frost in different areas that definitely will have an impact. The 8 to 14 day precip forecast is actually above normal here in the western Corn Belt and normal in the east. So you can see that precip forecast is starting to come back. Wheat prices, Chicago wheat, new lows last week, but actually saw some strength and reversed and went higher. So maybe we finally found the bottom in wheat. Of course, those world wheat numbers finally reported out, and maybe now we know why wheat has shown such weakness here when the U.S. did not have a good wheat crop, especially spring wheat. And spring wheat prices certainly bouncing down. Nice upside reversal on Monday. Actually, maybe we finally bottomed the spring wheat market. Gold prices, I mentioned, gold continues to shoot to new all-time highs, up $33, but up 130 some dollars, so up $200 here, and broke out of that resistance. Actually, if we come down here to 3,600, that's going to be a buy for gold again if we can get down there. The other thing that's happening in these commodities is the livestock. Wow, we see a little crack in the bull market. Have we broken? We've certainly broken this uptrend line. But our top picking strategy is for prices to drop more than 7%. This is about a 7% decline in fat cattle prices from high to low. We have to break below this, early next week, and then we will have to sell any recovery up here to 230. We may have finally topped the cattle market, or at least a potential sell signal in the cattle market. And the feeder cattle similar, we ran up almost to 270 and now dropping down, or 370 and dropping down to 344, 345. We need to drop below 340 basically to indicate a potential top. We need, almost need to see it drop down here. And then as you rally back, that's going to be your chance to sell within 7% of the all-time 6,000 year high of cattle. And that is possible that we have topped that cattle market. So we're just trying to wait and see where this settles out, but certainly some positive developments, at least on the grain side. And actually, if you look at soybeans, where our yield model is, And where USDA is, they're well over a half a bushel too high, 0.7 bushels too high, and the carryout in soybeans could get relatively tight, especially if the yields are disappointing. I think about record-shattering crops occur sometimes when you have slow development in the summer. It's actually better when it's dry, though. But the corn seemed to take the heavy rains better than soybeans. We have some very disappointing, yields in some soybean fields that drowned out during that wet period in June, July, when some heavy rains hit certain areas. But the corn seemed to fare better. There's all talk about the disease in the southeastern corn belt. We'll see if that actually takes place. But I find it difficult to believe that with a harvest coming of a very big crop, that we won't sag back down. The question is, will we sag back down to those lows at 390 in corn? I think that we can. And in soybeans, we probably aren't going to get back near those lows, though, because the fundamentals of the soybeans have improved considerably. They keep taking some acres away. We lost 6 million acres to corn this year. And that carryout projection can get perilously tight if the soybean yield is actually as low as our 52.8, which is still a record yield for soybeans in the United States, but not as high as USDA, and that can get things a little interesting in soybeans. Hopefully we can get up there and test that 1070 area November, or $11 futures area in November soybeans, and actually get some soybeans sold. Again, futures fix is probably the way to go because this basis is so horrible, especially up here in the Northern Plains. You have a great weekend and good marketing.